Infrastructure Investment Opportunities webinar. Have patience for a little bit longer until we formally get going. Infrastructure Investment Opportunities webinar. Louisa, can I ask you, is that echo a problem? I got an echo at my end. Did you get that as well? Okay, looks like we're okay. Welcome everyone to this Green Infrastructure Investment Opportunities in Malaysia webinar. I'm Sean Kidney. I'm the CEO of the Climate Bonds Initiative. I'm moderating today with a star-studded panel of speakers who will join us after we do a little introductory session on highlights from the report. This particular webinar and the report have been done in collaboration and cooperation with Capital Markets Malaysia, or CM squared, as most of you know, that's been such a critical agency in working to develop capital markets in Malaysia. An agency was set up by the Securities Commission of Malaysia. It's a government project, and I have to say an incredibly important one in the development of markets in that area. We're lucky to have them as a partner on this. On this particular webinar, you will hear speakers from the International Capital Markets Association, Mushtaq Kapari, who's the Managing Director for Asia Pacific. You'll hear Jessica Robinson, who's the CEO of C6 Vision and ex-head of the Asian Investor Group for Climate Change and the UN Principles for Responsible Investment Asia Pacific Office. And of course, you'll hear Zalina Shamsuddin, who's the General Manager of Capital Markets Malaysia, speaking. And we hope that Shawnee Wang, who's the Secretary General of the Hong Kong Green Finance Association and also Director for Asia Pacific of BNP Paribas, will be able to join us, but she's not yet finished the previous event. A few words from me just before we get going. We know a little bit about the environmental challenges that we're facing. Of course, there are incredible challenges for Malaysia and for ASEAN countries coming through the pipeline because of climate change. Everything from sea level rises to temperature anomalies, to crazy weather, to pandemics. After this brutal year that we've suffered, dealing with a global pandemic, it pays to understand that the Intergovernmental Panel of Climate Change has been predicting a century of pandemics as a result of climate change, beginning at the beginning of the century. We've had some close calls, MERS, SARS, and so on. This one got away from us. We need to learn lessons about how to avoid a pandemic that was rooted in pathogens jumping between species. We think bat colonies in China, Southeast Asia, as a result of degraded environments, forced them together and changing their habitat and so on. We will see a lot more of this, the experts tell us, which means that as we look at recovery and building back better, and using the recovery phase of the pandemic to ensure we look to the future rather than the past, we need to think of two key things. One is resilience. If we're going to have more pandemics, we need to learn from the last pandemic about how to better structure our health systems, our social systems, our economic systems, so we can bounce back sooner with less loss of job, loss of economic growth, loss of opportunity for our young people. And we need to be thinking about inoculating against the worst of pandemics by getting emissions down to minimize the traumatic effect of climate change. The Intergovernmental Panel on Climate Change says we need to reduce global emissions by 55% on 1990 levels by 2030, in 10 years' time. That's an extraordinary challenge for the global economy. Europe has committed to that target Arguably, they should commit to a higher target than the global average because of their historical contribution to this problem. But I guess we'll be arguing about that at the COP, at the Climate Change Conference in Glasgow at the end of the year. In the meantime, we need to look at what kinds of investments will allow us to build back better, to create jobs, to get our economies going while ensuring that we head off the risks of the future. Green infrastructure is central. We need to be looking at what that means. In energy systems, it means a bias towards clean energy systems, drastically and rapidly reducing emissions out of the energy sector. In the built environment, it means very efficient buildings. We need to bias to preference those buildings that are very low energy and stop building those buildings that are inefficient. It'll save us energy bills while we're at it, by the way. We need to ensure that transport is low carbon. That means, yes, rail systems and subway systems, electric buses, electric cars. This is going to happen very quickly. It also means agriculture, that sort of agriculture which reduces emissions and ensures it supports resilience going forward in the context of the sort of weather shocks we expect to have. There's a lot to be done. Today, we're looking at a report which looks specifically at green infrastructure investor opportunities in Malaysia. The background to this has been the growth of green finance seeking to invest in green infrastructure opportunities. In the green bonds and green Sukuk market, for example, we now have $1.1 trillion of outstanding. This is an extraordinary change in the global economy in the last few years, from nothing to a large and rapidly growing market like this. The investor appetite is extraordinary around the world. When we've seen the issuance of these green instruments, we see oversubscription rates of 2, 3, 5, 10, and 12 times above normal for these kinds of instruments. The investor appetite, in the words of one banker, is like a wall of money. Now, that doesn't mean that there are investments around that meet the criteria that people can invest in easily. We have to do some work to shape them, to prepare them, to package them. The underlying infrastructure is surprisingly common. When we started looking at this report, we found a lot of investments available in Malaysia that investors had not realized were there. And that's the essence of what this report is. I'm going to ask in a minute Bridget Boole, one of the editors of the report, to present some highlights of it. But I'm going to say this. Right now, we have the capital available globally. We have the capital available in Malaysia, thanks to the work of Capital Markets Squared, the Securities Commission, Bank Negara, to mobilize and inspire that capital. What we do need are instruments to finance that capital made available to those investors. This report serves as a guide to where we can look. We'll need to do a lot more than just in what's this report to achieve our 2030 targets, but it'll be a fantastic start. Together, we can make this change. We can achieve our environmental and climate change targets, but it will take work. We're going to hear a little bit more about that from the panel today. Bridget, can you take us through some highlights, please?
Hi, Sean, and good afternoon and evening, everybody all around the world, and thank you so much for joining us today. Yeah, I'll take you through some of the highlights of the report, but I must say that one of our main contributors to the report, Mooney Nguyet, she couldn't be here today, so I just wanted to extend a thank you to her for all her work on this report. So I'm filling in some big shoes here, but I do it with great delight, and I hope I'll be able to take you through some of the highlights. So I think Sean has already mentioned some of the, well, he didn't mention what the agenda is for today, but I'll take you through the highlights, and then we'll move on to the panel session after that. And I'm going to leave quite a fair bit of time for that because we, as Sean already mentioned, we have a star-studded cast. So I think that'll be very interesting. Sean's mentioned that we're launching this Green Infrastructure Investment Opportunities Report. And he's also spoken about why we've done this. And if you remember very few things from today, one of the real reasons that we've done this report is to highlight the wealth of green infrastructure investment opportunities that are already there and that are in the pipeline, and that we need to encourage more of. And a lot of this is around the idea of what is green is not always new and exciting projects. Some of them are things we've been doing for many years, like public transport. And these investments we've highlighted in the report, as well as some newer technologies, or hardly newer in the case of solar, but slightly newer compared to public transport. And this is really important because a lot of the investments that we have to make are not things in new and future technologies. They're technologies that exist around us right now. And so one of the purposes of the report is to highlight these opportunities and then use that to engage project owners, investors, developers, and all different types of market players on how we stimulate this green infrastructure pipeline. So what is the backdrop? We know that globally, green infrastructure presents a huge investment and growth opportunity. In ASEAN, the figures, you'll see many different figures, but around 3.1 trillion USD is required up until 2030 in infrastructure. Around 100 trillion USD of climate compatible infrastructure is required globally by 2030. And there's a big gap, right? There's a big gap in the infrastructure funding, and that's part of what this report addresses. Within Malaysia, this gap is also present. So the charts you see below you show the infrastructure investment required for each sector in Malaysia on the right, and for the it also shows the gap that's existing versus current trends, and that gap is fairly large. But compared to elsewhere in the world, this is actually, Malaysia has a hugely positive backdrop. There is a current investment trend that is very strong. There is a hugely positive credit rating. And so Malaysia is very different from other emerging markets in this regard. And that is something that really needs to be leveraged within Malaysia, as there is a huge amount of appetite for investment for investment grade investments within the region. So the figures we've seen, Malaysia needs a cumulative infrastructure investment of around 460 billion for 2016 to 2040 period. And energy and transport are the two areas and very capital intensive areas where the backbone of this investment will be needed. But we've also got the other kind of strong pillar. So we've got a very strong economy, we've got very strong underpinnings, particularly in terms of credit ratings, but we've also got very strong leadership within Malaysia on sustainable finance policy and on green bond policies. And this goes back over a number of years, right back to 2011, and I'm sure there are examples even before then of some of the planning that the Securities Commission have done, the Capital Market Master Plan, in 2014, the Sustainable and Responsible Investment Sukuk framework, and all of these different measures through time have brought in various reporting requirements and have brought much more attention to SRI investing and green Sukuk. And I will go into a little bit more detail on, in particular, on the Greens and SRI Sukuk framework in a moment. So there's this really strong leadership that we've seen within Malaysia, and that sets it apart from many other countries with similar statistics. So this is a hugely positive role that Malaysia can play within the region. Now, Sukuk is one area which we focused on the report, because Malaysia has a huge capacity to play a driving role in being a hub for global green Sukuk. So global regular Sukuk, if you look at the left-hand chart, Malaysia already plays a very dominant role. And within the green Sukuk market, that role by number of issuances is even more dominant. So you can see there Malaysia makes up 69% of the number of issuances that have been issued to date. On a purely quantitative basis based on USD, that role is not as strong just because of the size of the deals have been slightly smaller. But in terms of the diversity of issuers and the number of issuers, that Malaysia far exceeds all other countries in terms of Sukuk. So this is where we really see a huge role for green Sukuk being able to finance all the infrastructure that we've already mentioned is needed. The Green SRI Sukuk Grant Scheme was established in 2018 and has since been renamed, but this is a shining light globally around how Sukuk and green bonds can be incentivized around the world. And it was really one of the first examples that we've seen on there being grants available and incentives available for issuers to cover some of the costs of making a bond or a Sukuk green. So that's been a hugely positive step, and we hope to see that driving even more issuance. So Sukuk is you can see that a bit more detail in the report, and that's a hugely important role for Malaysia. But I know the panel is dying to get into some of the details on that a bit later. So Sean has mentioned what is green, and that's a big focus of the report. For this report, we focused on the large infrastructure that will be required. So particularly renewable energy, low carbon transport, sustainable water management, and sustainable waste management. In the rest of the things that Client Bonds does, we also look at many other sectors such as industry and buildings and others. But for this report, which is focused very much on infrastructure, those sectors were seen as less important. So we honed in on these 4 sectors. Within energy, there's a hugely positive backdrop. So Malaysia's target for renewable energy has just been increased. So the target is 31% of total generation capacity by 2025 and 40% by 2035. So these are really, really big numbers. And you can see on the right-hand chart how we expect solar will play a really large part of that, and really ramping up to 2050. So solar is going to be the backbone of renewable energy, and it makes up the majority of the sample pipeline that we identified in this report. Low carbon transport, what does that look like? So the transport sector is growing rapidly each year, and it accounts for a really large portion of emissions, so around 27% of emissions from fuel combustion. And Malaysia, as we know, is one of the countries with the highest per capita CO2 emissions per capita in the ASEAN region. So any measures to reduce emissions will focus largely on transport and energy, as previously mentioned. And one of the areas where that needs to focus on is in reducing the number of vehicles. So you can see in the chart on the right, the number of vehicles per population is outstripping population growth. And so that means that we either have to focus on investing in electric vehicles, but also, and perhaps more importantly, in expanding public transport systems. And there's a very strong base from which to grow, and there's a lot of projects in the pipeline, which we've noted in this report. In sustainable water management, this is a slightly smaller sector. It's always quite difficult to identify water projects, but this really ties in a lot to what Sean has already mentioned around the importance of resilience. And around sustainable water management, there's a lot of discussion within the industry in Malaysia and in elsewhere of non-revenue water losses. So, losses from leaks, from unauthorized water, from burst pipes. And this accounts for a huge percentage of lost water each year. And fixing those the projects to fix those leaks, but also to improve the water system are both an important part of mitigation, because moving water around is very energy intensive, but is also very important in resilience. So there've been a huge amount of infrastructure that has gone into improving clean water accessibility, and that has really changed over the years. There's still some water shortages in many states, and I've already mentioned the issue of non-revenue water, this idea of leaks and burst water mains. So there will be a lot of projects to improve water management and to reduce non-revenue water. And then the last part of this is expanding sewage services, which is also required. So always water projects, it's more difficult to identify projects, but we have identified a sample of some of the types of projects that could classify as green under the Client Bond standard. And the last area we looked at was waste. So waste globally, but also within Malaysia, contributes a huge amount to emissions, and that largely comes from landfill. So you can see the chart on the left shows the how residential waste accounts for the largest proportion of waste within Kuala Lumpur. And on the right shows the treatment and how waste is treated. And you can see how that is going to change over time. And I'm sorry I haven't got you updated figures it was a little bit difficult to get some of the figures, but I hope we'll find them for the next report. But you can see that incineration, and we have a number of incineration projects showcased in this report, is a huge part of the changing face of waste management will be dealt with. So that gives an overview of the sectors, and then we've also just got a few quick case studies just to round up the presentation based on the report. So in the report, we present a number of case studies. This is one of them, a solar farm in southwest Malaysia, which was cost around just over 1.2 Malaysian ringgit, and which is around $300 million. And it's a 714 megawatt project, so a really big project, and that is now mostly in operation. The other project that we showcase, and there's many other transport projects, is a mass rapid transit line within Kuala Lumpur. It's under development, and it's rail infrastructure. And this comes back to kind of letting people understand what counts as green infrastructure, and big rail public transport projects is definitely a core part of that. They're very large projects. They tend to need a large part of funding. They also can be funded over a very long period because it's a very well-known and stable technology. So these types of projects tend to be very well suited for bonds. I'm not going to go into any more detail in any of the projects, and I think I'll leave quite a bit of time for discussion. So Sean, I think that gives us a good overview of where of the report, but do go and have a look at it because there's a lot more detail in there.
Thank you, Bridget. I hope you will post the report into the chat box so those people who can download it. But of course, it's available on the Climate Bonds website, climatebonds.net. We have some great speakers. I'd like to ask Zelina Shamsuddin, who's the General Manager of the Capital Markets Malaysia, first to make some remarks about why you think this is important and what's behind Capital Markets Malaysia's, and not to mention the other regulators, looking at green and social investments in Malaysia. What's the thinking behind that?
Hi, Sean. Thank you so much for the introduction. And I'd like to thank my fellow panelists for joining us today. I think one of the reasons, as Bridget said, was we wanted to showcase the investment opportunities in Malaysia. But I think more importantly, we wanted to send out to share our experience as a country, how the various segments of the financial sector and the economy got together and made sustainable finance a priority. So you have the regulators doing what they do. You have the government has played a significant role in terms of the policies. And as Bridget mentioned, there are tax incentives out there to sort of support the pricing of green finance. And then you, of course, you have the corporates who have stepped up in terms of their targets in terms of emissions. And of course, I mean, another thing we wanted to showcase was how we have addressed the gaps that we have seen, that we have not, that usually when you talk about green finance, the growth is sort of limited because people don't understand what is green. People don't understand what are the tools involved, the technology involved. It's in some places it's new technology, so there's new risk. How do you price a new risk? So there was a gap in knowledge and understanding, and so what we did as a country was we decided to put in centers of excellence, and we not only brought up the level of understanding amongst investors, but we also taught the intermediaries, and we engaged with the corporate so that everyone was on the same page. But I think the key issue that we wanted to showcase today was how Islamic finance has played a role in green finance. We're looking at the alignment between the Islamic finance principles and the key impact that green finance or sustainable finance wants to deliver. Given that alignment, we have seen that Islamic finance instruments are perfect instruments to be leveraged to enable green finance. And we wanted to show how the green Sukuk has played a big role in Malaysia and also in other countries. And we see continuous sort of interest and demand in that space. So I'm going to stop there, Sean, and then I'll carry on later.
But you raised some very interesting points about the alignment between Islamic finance and what we're doing on the green agenda. Of course, Islamic teachings do include substantial comments about protecting the environment. So it's incredibly consistent, not to mention the whole point is to ensure that we are contributing to society while contributing to financial well-being. And I have to say, I think there's a lot to learn in the West from Islamic finance in this area, a hell of a lot to learn. While we struggle with trying to encourage ideas about ESG and so on, which is still remarkably contested in so many places, there's a whole body of thinking which just takes it as the norm that finance should contribute to a better world. So it's very interesting, this. Of course, you are still in the process of growing Islamic financial markets in Malaysia. It's very much a work in progress, hence the incentives and so on. Do you see evidence of overseas investor interest from your perspective? We discussed in our prep call the other day that Dublin is one of the world's largest exchanges for Sukuk, to my surprise, I have to say. So I'm seeing some evidence. How do you perceive it in Malaysia?
I think if you look at Malaysia's experience in our past, I think one of the comments generally, Bridget sort of alluded to it, and the general feedback is the size of the deals in Malaysia are relatively small. And that is, and therefore there's not much room for foreign investors. But I think as a country, we've been lucky because we have a strong and deep institutional investor base here. So there's a strong demand for Islamic and sustainable investments onshore. So we've seen that picked up quite quickly. But if you were to talk about Islamic finance in terms generally, let's look at the sovereign issuance that Indonesia did. That was taken up by both conventional and Islamic institutional investors. And it was managed by one of our banks, Malaysian banks, who arranged it. And it was widely accepted and oversubscribed by both conventional and Islamic investors. So I think there is a growing interest and a growing sort of demand for Sukuk in itself, especially in the space of green or sustainable.
Mushtaq, you represent, of course, an incredibly important international association, the International Capital Markets Association, amongst other things, the organisation that sponsors the Green Bond Principles and various other variations of that, sustainable bonds, transition bonds, etc. How do you see the opportunity from the point of view of Malaysia, and what do you think the future holds in this area?
Sure. Thank you, Sean. First of all, thank you very much for having me here in this conference, this virtual webinar. I'm really honored to be here. And thanks also to CM Squared. We've been really lucky to work with you over the years. So you're right. I work for ICMA, we're the International Capital Market Association. And to be honest with you, we're not a sustainability expert like you are, Sean. Our organization is not focused on sustainability. We're rather focused on the financial markets, on the bond markets. However, we were very fortunate, and I would hope to say a bit ahead of the curve, to be able to be involved in the Green Bond Principles back in 2014. And since then, we have developed a number of similar standards for sustainable capital markets, or I'd say guidelines, probably better than standards, dealing with the issuance process, the disclosure process, the way that bonds and other similar instruments should be put together without necessarily talking about the specific climate-related aspects of those, the greenness of those, which we leave to the experts, frankly, on sustainability. So one thing that's very important to us, and if you don't mind, I'll just go back a bit of history. Why does the Green Bond Principles even exist? Well, the reason it exists is that when this market first started, there were a number of issuers who had issued green bonds. They were quite sophisticated. There were a number of investors who were very interested in sustainability, who were a bit the vanguards. But as the market started to grow, the leading market participants started to get worried that there might be the risk of confusion in the market about what is a green bond, and even worse, there might be some abuse of the term green bond and sustainable finance. So the market actually from the bottom up got together and said, look, why don't we come up with some very general guidelines on what a green bond is, what the minimum kind of requirements should be for sustainable finance, and that will help the market grow in a very credible way. And that's how ICMA got involved. And since then, of course, our work has expanded quite a lot, not just to green bonds, but also to social bonds, to sustainable bonds, now to sustainability linked bonds. And we've also recently issued guidance on climate transition that's applicable not just to green bonds, but also to a wider array of instruments. And what we've also seen though, even though the guidelines themselves are helpful, as Ms. Shamsuddin highlighted, the education aspect is also very important. I mean, you can put out these standards, but if issuers aren't aware of them, if investors aren't aware of them, then there's not much you can do. There's not much you can do to build a market, right? And so that's been a central part of what we've been doing as well. And finally, and this is kind of new, over the last maybe I would say 3 to 5 years, very gradually, the sustainable finance market has I think transformed from one that was driven largely from the private sector, very bottom up. And if you'd ask some of my members, like 2017, do you want governments to be involved in this? They would say, no regulation. We don't want it at all. It's all counterproductive, everything. But now we've seen that, starting from the example of China and then the leading role of ASEAN in putting together the green and social bond standards, we've seen that getting official sector involvement, official sector recognition, and official sector kind of pushing, especially in Asia, is extremely effective, and I would almost say essential in helping to grow the market. So we at ICMA have been trying to help a lot with that. Now, with Malaysia in particular, I personally see Malaysia as a really promising case for developing sustainable finance because of the sophistication of the markets. And Malaysia is, I think, one of those states where the market is quite developed, but it's not, I would say, long-standing. So it's developed, but still dynamic. It hasn't gotten to the point where it's sort of stuck in its ways, so to speak. So I find working with the official sector in the markets in Malaysia a really fun experience because people know what you're talking about, but at the same time, they're really open to ideas. And I think in Malaysia, especially, you see the risks very starkly of climate change. You see the necessity for clean energy, for clean transport, for clean water, in some ways that other countries don't. And so I think the urgency is there in Malaysia in a way that it's not in other countries. And frankly, I think that the efforts of the of organizations like CM Squared, of the SEC, of the ASEAN representatives, even Bank Negara, have been extremely helpful to promote the market. And so ICMA is very proud to be a part of that. Finally, just one point, I would say that there is still some work that needs to be done to educate the international investor side. And I know that the size of issuance is generally relatively small in Malaysia, so it's not as obvious, compared to some of these big benchmark Sukuks, for example, from Indonesia or Saudi Arabia, for the international investor. But I see that changing in the future. I think the issuance sizes are going to get bigger. Some of these projects are going to get bigger, and there are going to be opportunities for international investors. But the knowledge of Malaysia from the point of view of, say, a kind of random European or US investor is still not really what it should be. And so I think, this report in particular, and further efforts like this are really going to be necessary in order to share the opportunities and make sure that the international investor base understands them. The money is there, the interest in EM is there, and absolutely the interest in sustainable investment is there.
So you raised some interesting points, Mushtaq, but thank you for that exposition. Zelena, we might come back to that issue about aggregation size, which you also raised, because there's the engagement with international capital markets is, of course, some interest for us. But I also think it's incredibly important what you said, Zelena, about the domestic investor base. Malaysia is in an unusual circumstance compared to some of its ASEAN neighbours, that it does have a very strong and robust investor base. So it makes, in some ways, a little bit easier compared to some other countries that are relying on international flows. But let's come back to that, and let's cut to Jessica, because, of course, she's going to tell us a little bit about this international investor base. Jessica, you've had a long experience in Hong Kong with looking at interesting the interesting of investors around Asia on green issues. And then more recently, you've been based in the Middle East, looking at those sort of companies. What do you see as the lessons learned out of Malaysia and what the future might hold?
Sure, thanks, Sean. I thought for a minute you were at a loss for words then. So I'm probably in quite an unusual position in that I've worked extensively in Asia. So as Sean mentioned, I was head of the Asia Investor Group on climate change, head of Asia for the PRI. I did a lot of work with the Chinese and Hong Kong governments on green finance, and also in Malaysia. So I'm sitting in the Middle East. I've been here for about 3 or 4 years. So I have this quite interesting perspective on the developments we saw in Asia and how this is being translated here in the Middle East and the GCC countries as well. So what I'll just do is share some observations and leverage perhaps some of the great findings of the report on Malaysia and perhaps how we can bring them into the Middle East as well. I mean, obviously green infrastructure investment in this region is potentially huge. The opportunities are there, with the region's diversification efforts really being the key driver. And for sure, we are shifting towards investing heavily in renewables, launching many green bonds, and also other green financing initiatives. I also think it's worth commenting on the sort of burgeoning urban growth, because again, this needs proper planning and also to reflect these very unique challenges that are faced here in the region, all pointing, of course, to green infra investment. To Mushtaq's point, actually, I also believe the finance is there. In theory, there's no shortage of the finance for these green infrastructure developments. We have the banks, the funds, the multilaterals, we have the equity investors, but we also need to do some work to prepare to understand returns and stakeholder interests, and then really also on the tenor, the pricing, and obviously the risk understanding. But I do think in the Middle East, investors and issuers are clearly very, they see the potential. And a lot of that is around harnessing the climate and the geography to overcome these challenges and what it means. So for example, on the investor side, thinking about water and wastewater, because we're sitting in the world's driest regions. This is obviously accentuated by population growth, climate change, of course. On the issuers side, obviously energy, particularly solar power, which has already been referenced. We sometimes hear it being deemed as the new oil for the region. We've seen huge solar parks in the UAE, in Abu Dhabi and Dubai, where I'm based. And so there's good examples of really strong green infrastructure investment. Masdar City in the UAE, which is led by one of the Abu Dhabi Sovereign Wealth Fund subsidiaries. NEOM in Saudi, as many of you will have heard, the 500 billion smart city. We're seeing a lot of shift towards sustainable infrastructure in Saudi, with renewable energy development programs, really trying to support loans and financing into these projects. Now, where we contrast with Asia and then of course Malaysia, I think that much of this action is sort of driven by a perception and a belief that a more sustainable business will play a role in mitigating the challenges of future shocks. And Sean referenced the pandemic at the beginning, and I think that's all been a massive learning for us as we look forward and we deal with climate change. But at the same time, we're also seeing a strengthening of ambition around certain climate risks, and this is driving the opportunities. As the report that was launched today shares, obviously the capital needs are huge, and this is where green bonds and also green sukuks, which I think we will talk about a bit more later, are really critical. I do think on reading the report, there's some really strong arguments for the UAE and in fact other countries in the region, in the GCC countries, to develop a closer relationship with Malaysia. When you see all the work that's been done, there's a lot of sharing of experiences and learnings. There's a lot of supporting financial innovation and identifying co-investment opportunities. But I think Malaysia has really moved forward on certain key issues. For example, the role of central banks, right? Bank Negara has taken a lot of big strides forward, which I think are very important to recognize and for other central banks to actually look at in detail. I think Malaysia's done a great job on bringing together stakeholders. So the Committee on Climate Change has been very important. And I think in the Middle East, that kind of model of collaboration is really important. And also, as the report tells us, Malaysia is the global leader on green sukuk issuances. And again, I think this is really, really important that we look at this instrument and really think about how we can apply it outside of Malaysia. And obviously, it's highly relevant to many countries here in the Middle East. And just my final comment would be obviously back to the pandemic. We really, as we sit sort of watching the effects of the slowdown and the oil crisis, I believe in the region, we're seeing an acceleration of the diversification process. And this ultimately means a transition to green finance. So with that, I really think we're ready to go in terms of looking at what's happening elsewhere in the world and building on those models of success.
Fantastic. Thank you, Jessica. Oh, so much to talk about. And now we have Shawnee. Look at this. The camera came on. Shawnee, lovely to see your face again.
Hi, Sean.
For those of you who don't know, Shawnee's been a central part of the development of the Hong Kong Green Finance Association, working very closely with bodies like the Hong Kong Monetary Authority, and also is Director of Asia Pac for BNP Paribas. Your thoughts, Shawnee, on the opportunity here in Malaysia, where you see directions?
Thanks a lot, Sean. Hi, everyone, and thanks for having me at this panel. I think it's about time for us to talk about Malaysia and ASEAN market, because we certainly have seen the huge growth in green financing globally. And in Asia, we certainly put a lot of emphasis on China, South Korea, and Japan, where we did see the consistent supply, bulky supply from these three markets, right? But for ASEAN and Malaysia in particular today, I feel we are only just scratching the surface. In the report that you mentioned, Malaysia is the leader in the global green Sukuk market, but I feel there's a long way for us to grow in terms of scale and pace. And I think, there's no better time to talk about it this year, given that there's a lot of focus on climate with COP coming up. And also 2020 closed with a very positive note. The three global large emitters like China, South Korea, Japan, announcing the net zero or carbon neutrality commitments, right? So how do we align financing to support projects and assets that can deliver clear climate benefits? I think we need to do a lot. There's so much we can do in Malaysia. And I think what I want to add to the previous panelists is the ability to attract, international flow into the ASEAN, into Malaysia, green Sukuk. I mean, if you just look at 2020, a year full of disruption, to say the least, but driven by growing awareness in climate and ESG broadly speaking, investment in ESG funds has hit an all-time high with 347 billion of inflows and 700 new funds launched globally. So some of those funds do have emerging market mandates, allow them to support Asia, emerging Asia market, green bonds, green Sukuks. And it has been evidenced, by the largest green Sukuk, being issued consistently by the government, the Republic of Indonesia. So we need more of the supply coming from markets like Malaysia, so that investors can participate, right? Right now, if we're looking at the current green Sukuk markets, many of these issuance are dominated, in the ringgit currency, which it is a little bit difficult for international investors to come in to diversify their ESG portfolio. While they're adding more and more AUM to support ESG or climate, they also want to diversify their green allocation, right? So they need countries like Malaysia across, different issuer types, from the SSA, sovereign agency, corporates, financial institutions, to tap the market. Otherwise, if there's no supply, it's just hard to tap these kind of demand available globally. We continue to see the green financing market as a demand-driven environment. So investors are extremely keen to take part, to support, green issuance. So if there are Sukuks, green Sukuks, in line with international standards or in line with international investors' expectation, it would be a big selling point for them, to come in, or for Malaysia to have additional liquidity to support the climate transition.
Interesting points, Shawnee, very interesting points. I'd like to ask Zelina to weigh in on this point. I'd also like, by the way, just to alert you to get the transition finance in a minute too, as the next stage. But on this question of international capital, which of course is one opportunity, the feedback I'm getting, Shawnee, you might comment on this, from international investors, is that SSA issuance, that is national, sovereign or sub-sovereign, what does work in ringgit. Like there is growing appetite for domestic currency, so we can avoid the crossover. The challenge is when you get to a corporate level where the risk levels are quite high. We haven't actually seen any provincial or state, I should say, or SSA issuance out of Malaysia yet. Zelina, do you think this is a possibility in the coming future? Is this something we should look forward to, either in the Sukuk format or even possibly in the bond format going forward? I mean, I'm speaking on behalf of international investors listening in here who are looking for opportunities.
Yes, Sean, I think what the government did announce in the budget for this year was the government is looking at a sustainable bond or Sukuk coming out this year. So that would be in the pipeline. But going back to a couple of comments that everyone made, I just wanted to sort of touch on a particular points in terms of, and I think it's one of the questions in the chat group as well, in that are domestic investors crowding out international investors? And I think it boils down to, again, there's a lack of supply of projects. Malaysia's very unique in the sense we're the only country where all the issuances have been led by corporates. And so essentially, at the end of the day, the capital market is an intermediary role. We can only fund what the economy needs. And I think in that sense, and given the fact there's a lack of projects, domestic demand immediately absorbs it. For example, we have 3 of our institutional investors, the largest players, Khazanah, EPF, and QAP, are PRI members. So they have a requirement to ensure they invest sustainability as well. So I think this challenge to sort of manage demand and supply, we shouldn't sort of narrow it down to one particular country. I think if we're looking at Malaysia, I think we should also look at ASEAN collectively. And I think if you're looking at emerging market standpoint, ASEAN as a whole has got significant potential. And like Mushtaq was saying, the ACMF has worked very closely with ICMA, and they've come up with the ASEAN Green Bond Principles. So the regulators have put it in place. And I think now it's just a question of knowledge and understanding among issuers what qualifies as green. I think the general assumption is renewable energy, and that's it. But I think what people need to understand is there's a wider definition of what qualifies as green. And that's one point. And the second point is, do we want to stop at a definition of green? Because, I mean, the numbers, I mean, Sean, CBI themselves have said that just investing in green projects and just funding green projects is not enough to meet our carbon emissions reduction targets. We need to start looking at other kinds of projects, sustainable projects, transition projects. We need to get the whole world transitioning, and let's not just focus too much on green. I think there's a bigger sort of area for us to play in to really effectively make sure finance does impact and reduce carbon emissions.
Very good point, Zelina. I might cut to Mushtaq now to talk a little bit about the transition bond principles, which I think is a very important initiative in this area. Tell us,
Sean. Okay. Okay, sure. I'll talk about that because you asked me. I was going to respond to Zelina, but so ICMA has, again, we've started with the green bond principles. We started with the social bond principles, and worked very well with ACMF on helping them with regional standards. By the way, I have to mention, for those of you who may not know in the audience, that the ACMF standards are actually more strict than the global green bond principles that have been organized by ICMA, and I think that's an extremely powerful argument for Malaysia and ASEAN as a sustainable investment destination. So given the overall interest in transition over the last couple of years, really, I mean, ICMA is, I would say, acts as a bit of a bellwether. You know, we sort of sense the way the market is going, and we try to be a representative of general consensus of the market, which may not be the correct view, but it's kind of the overall view. And the idea of transition finance has become extremely important, but also very interesting to the global investor base, but also really to the global issuer base as well, because there are many issuers out there who feel like they are excluded from the sustainable finance market because they are not inherently green. Now, if you look at the green bond principles, you may have noticed, especially in earlier versions, that the green bond principles themselves are based on use of proceeds. They didn't talk about the identity of the issuer. And when we first designed the green bond principles, it actually shouldn't have mattered where these were, who was issuing the bonds. What was important was where the money was going, whether the projects themselves were green. And that's understandable. I mean, if you're funding the projects, are they green or not? Does it really matter who is actually funding the projects, who's issuing the bonds? Well, over time, the market consensus shifted to where the issuer of the bond is actually quite important. And now, whether it's right or wrong, the reality is that if you are not a green company or a green bank and you try to issue a green bond to fund green projects, the market will not accept that. The market demands, and investors demand now, that the issuers of the bonds themselves demonstrate sustainability in their own operations, their own overall strategy. And it's for this purpose that ICMA has formulated or facilitated, I would say, we didn't write it, but we facilitated the Transition Finance Handbook. Now, one thing, just to clarify, it's kind of a tricky point, I would say, but my colleagues are making me say this, that we're not putting transition bond principles in place, right? This is not necessarily a new asset class of bonds. What we're doing is we're giving a framework for additional disclosure at the issuer level for any issuer that wants to issue any kind of sustainable instrument. So in theory, it could be used for equities or anything, but we designed it to be used for green bonds and for sustainability-linked bonds. And so if you are an issuer that is not inherently green or that's not obviously green, but you can demonstrate a credible, ambitious, science-based pathway to sustainability, then you can disclose the details of that in addition to the disclosure that you would give as part of your sustainable instrument. And that would allow you to basically present your instrument, your bond, whatever you're issuing, as transition finance. And that would give it credibility in the market. Maybe it's not totally green, but you are on your way. And what the handbook does is it outlines the kinds of disclosures that would be needed at an issuer level to really satisfy this requirement to show that you are truly on a transition pathway.
There are some challenges and boundaries this, and Shani, I've had a few arguments about this in the past. That's the nature of this particular game, because we're working out what a transition needs to look like. But what we've said very clearly, the Climate Bonds Initiative, is high carbon companies issuing bonds or other sorts of instruments like Sukuk for green should be included. So we want Petronas to do green Sukuk for renewable energy. That's an easy one. 2, companies that are investing in capex that is pertinent to the transition. Take a steel company that is doing some things which are not obviously green now, but are clearly part of shifting to low carbon steel in a rapid fashion. We need to look at those. In the European taxonomy, we actually included as sustainable the retrofitting of gas-fired pipelines to make them hydrogen ready, which essentially means you turning them to plastics, as an example of that. So I'd call those stepping stone investments. And then lastly, we have in the European taxonomy talked about assessing corporate strategies, or rather corporate capex plans. So we've had BP and Shell in Europe issue 2050 net zero targets. When they first came out, there was a little bit anxiety about the fact they included $20 billion of investments in gas, which wasn't consistent, the IPCC or the IEA. Since then, at least BP has come out with a much stronger transition plan, which looks very interesting. So one of the things we're looking at doing in Europe is frameworks to better assess corporate capex plans, so we can actually say, you know what, possibly all of BP's bonds or investments should be included in this if it's in line with the appropriate ambition that we need to achieve the Paris Agreement with. And that's the test. And that's the sort of thing Shawni and I were talking about, is what does the appropriate ambition look like? Now, this is hard. It takes a bit of work, but it is utterly essential for all of us. The key point is we see this as an extension of the market, exactly like ICMA and Mushtaq does. It's not a separate market. It's part of the overall one market. And think of this as, for our listeners, as flavors of ice cream. You'll have a green flavor, you'll have blue flavor for water investments. You'll have transition flavor. You'll also have resilience flavor, because of course, one of the things we need to do is now support coastal protection. How do we improve the ports around Malaysia's resilience to be able to cope with storm surges and sea level? How do we ensure that heat intensity that happens in Malaysia can be better dealt with going forward? Well, there's some infrastructure investments involved in doing that. And then, of course, social resilience. How do we protect ourselves better against future pandemics? It needs to be brought into this universe. In Europe, we have a social work group under the European taxonomy looking at guidelines which will inform further issuance by the European Union of social bonds. There's already been $30 billion of these. So this is all part of one large area of work, which is extraordinarily exciting, full of opportunities. But of course, what we need to do is relate it back to the urgent infrastructure needs we have now. So, and of course, Jessica, in the GCC, as you said, we have so many of these. We've already seen green Sukuk for desal plants, and we've seen renewable energy investments and so on. But do you really think that a closer collaboration between Malaysia and GCC countries can work on this? Is capital in the GCC interested in Malaysia or vice versa? Tell us more about that.
So, I mean, certainly, on the transition bonds discussion, I know obviously has huge relevance to sitting here in the Middle East. And I'm in agreement with certainly Zelina and Mushtaq. And we obviously know that certainly, here there are many industries that need to undertake those very complex and gradual transformations. So I do believe that this is something we need to look at more seriously in the Middle East. I mean, when you look at the potential growth for green Sukuk in particular, obviously green bonds more generally have been going. I think the first one was issued in 2017 by First Abu Dhabi. They're obviously quite modest in size, but it does suggest there is that many of the banks are looking for new financing tools as well. But in terms of the green Sukuk, I think this is really where the GCC can take a cue from Southeast Asia and the Islamic green finance progress that's been made. So for the GCC banks, obviously the green Sukuk is an opportunity to leverage that quite unique position in that we can further broaden the Islamic financial market and close the gap with conventional Islamic financial world. I think that's a really important part of the solution. Certainly it would allow GCC issuers to access a wider pool of capital, which is necessary for the green Sukuk market to develop. It'll also attract conventional investors by providing a sort of high degree of certainty about the allocation of those proceeds. And I think for investors in Islamic countries who would never have invested in a green bond, it's also an exciting opportunity. So your question about, in terms of how can we leverage or can we partner, can we work together? I think absolutely, because given the speed at which we need to actually bring this capital into the market and the learnings we've had, whether it be around the issuance itself and the various requirements that are put around for the issuers when they bring it out, I think is really, really important. And I know here from what I've seen and also the time I spent in Asia that the learning curve is very steep, but also there's a very exciting opportunity for us to share what's going on. And I know here both the motivation on the green infrastructure investment is there. So it's really, well, how can we develop the skills and the expertise to get these financial products and instruments off the ground? Obviously, the market's still in its infancy. So I think now's the time, really. And in fact, I was thinking maybe we should do a report on the Middle East of green infra opportunities.
Excellent thought, excellent idea. Shawni, over to you for comment. Just before I go, for those listeners on board, this session is being recorded. It will be available on YouTube and at the climatebonds.net website. If you want to ask a question, there is a Q&A, a question and answer button at the bottom of the screen. We'll tackle some of the questions that have been asked in the next round. Shoni, your thoughts on this direction?
I think when we talk about transition, the end goal is certainly net zero transition, right? So right now, I think the complication or the complexity really goes towards defining ambition at project level with user proceeds being funded, fund towards these kind of projects, right? So we are really talking about the hard-to-abate sector, the high-emitting sectors like steel and cement manufacturing, to just name a couple of examples. And right now, we certainly don't see these companies are able to utilize, the existing green bond or green loan markets, because it does require the proceed being used towards low carbon projects or technologies. But I firmly believe that, transition finance in these kind of hard-to-abate sector will bring, the biggest delta in terms of change if we want to meet, all the decarbonization goals set by different countries. But what we need to be mindful is that decarbonization pathways needs to be considered, in local context. Certainly we have the global goals to achieve 1.5 degree by 2050. How this goal being translated in Malaysia, in ASEAN or other parts of Asia needs to be contextualized. And I feel international investors, if they're not based, focused on Malaysia or based in Malaysia, need to have that mindset to understand, the local transition pathway and how these being translated into sector level, company level in terms of setting their carbon reduction target or transition, strategy. Take the steel industry as example. It really relies on coking coal, which is high carbon emitting. But, you mentioned the use of hydrogen, and developing the use of hydrogen for steel smelting could decouple heavy construction and engineering sectors from their reliance on coal. So projects are under development to accelerate clean hydrogen production for steel industry, will spur demand, for green alternatives, to the existing methods, right? So we certainly want investment, transition finance to support these kind of examples where clear environmental benefits can be defined. And at the going beyond the project level of transition or technology level transition, I think we can really reference the latest handbook by ICMA, Transition Finance Handbook, where they really ask the issuer at the company level, issuer level, if you are a sovereign agency or a bank, at the issuer level, what's the transition, strategy across the company, across the issuer, right? It's one thing to look at the project, because you would be, it's quite a micro level, but investors want to make sure at the corporate level, at the issuer level, there are transition strategy behind it, so that, it's not just one-off transition project or transition bond or transition finance that they are supporting. So I think we need to take into the perspective of local context, technologies behind the use of proceeds, and the issuer level ambition in terms of transition. So I think when we capture all these three important elements, this is where we can support, or the market can support, ambitious transition.
Sean, sorry, Sean, can I just jump in there?
Please.
No, I just wanted to comment something on what Shoni said. And Shoni, in Malaysia, what we've done is, as we're trying to create greater understanding and knowledge amongst the various players, we set up a center of excellence for corporates. And we thought, this is pretty straightforward. Let's just teach them the basics of TCFD and science-based targets and improved disclosures, and investors will come floating in. Now, and I've engaged with quite a few of the players, and just the amount of capital involved in terms of developing technology for Scope 1 emissions, to do disclosures on Scope 1s, let alone Scope 2 and Scope 3. The thing is, and I'd love to hear your view and Sean's view as well, are investors giving a preferential pricing for these kinds of activities? Or are they still going back to credit risk and saying, okay, I'll charge you this amount, but go on, invest all this extra money and be more efficient? You know, so where does it sort of, who should play a bigger role here?
That's a really tough question. So we look at sustainable bonds issued by APEC issuers in 2019 and 2020. So it's a sample of bonds worth about almost $100 billion equivalent. So we look at the new issuing premium, we look at the tightening of pricing, oversubscription rate, you know, these kind of characteristics, so that we can have a more science-based, you know, answer towards question like that. What we have found comparing sustainable bonds, so including green, actually most of them are green in the last 2 years in US dollar, that new issuing premium on average does show better outperformance for sustainable bonds, which is about 5 basis points compared to conventional. And in terms of tightening of final price guidance and initial price guidance, again, we do see a little bit of advantage for the sustainable bond issuers. But I have to be honest with you that the kind of outperformance is not significant, right? So for an issuer, 2 or 3 basis points does not make a huge difference for them to jump over the barrier to issue a green bond overnight. But what we have seen is the ability to attract, you know, a different pool of investors, particularly those who have a strong ESG appetite or strategy or a mandate. So that's something that is clear from bond to bond, issuer to issuer, country to country across, you know, APEC. Going back to Indonesia, right? They have been consistently issuing green Sukuk. So as a key underwriter in their green Sukuk, we were able to observe the increase of ESG investor participation year to year. And in some of the private sector names in Asia, we actually saw, you know, 30% of ESG investors in their first green bond, and increase to 50% of the total allocation, you know, after regular issuance over the last 2 years, right? So issuers are able to build up their credit curve with ESG investor participation. And these investors are very sticky. So when you are in a volatile market, particularly let's think about the US trade war, you know, tension, and also COVID volatility or disruption, we saw these ESG investors being very sticky to these instruments, which could provide benefit to your secondary market in terms of stabilizing your price, and that adds benefit to your future issuance. So I think at the point of issuance, the benefit is not significant. It's there, but not hugely significant. But I think the intangible benefits are more important to issuers tapping the sustainable bond market these days. I hope that answered your question.
It did, thanks.
I think it's worth saying that the stickiness issue is amazing and I don't mean stickiness in terms of people holding and buying and holding. I mean people liking the theme and liking the sector. So you still get trading in portfolios, but it's a much more domestic trading. In March last year, one of the largest US investors told me that while vanilla bonds froze, the whole market froze for a while, they couldn't place a bond, trading in green bonds kept on going normally. That liquidity, they were still liquid, which of course is gold dust for an investor. And we're seeing in the secondary market very strong price performance. Now, you know, it's more than 2 basis points. The German green bond, which got a 1 basis points lower price at issuance, negative interest rates, by the way, still got 1 basis point lower, is trading at a 4 to 8 basis points premium in the secondary market to the vanilla German bond. if you look at higher rating, let's say Renew in India recently, they issued a bond in the European market, a US dollar, and they got a 4% interest rate, which is the lowest interest rate that any renewable energy company, as far as I know, had ever received in India. So direct comparability is hard in terms of very few people issue a vanilla bond on the same day as a green bond, like the German Treasury tried to do. But the treasurers we're speaking to are definitely seeing price benefit. They're seeing significant. In double B level, we're seeing 30 to 40 basis points being quoted, but no one is doing it for the price. And I think Shalini's points are really important. They're doing it because the depth and stickiness of investor engagement, which they really value, and it makes it easy to issue new bonds, and they extract price in a serial kind of way, of course, as they do. But the most important thing is being able to consistently, easily, and regularly raise capital and increasing it. And now what we also see, by the way, thanks to a study at the Hong Kong Business University and another one in Germany, I think it was, we see a stock price bounce. So in liquid currencies, when someone issues a green bond, their stock price goes up and stays up. Now, do we see it in ringgit yet? We don't have liquidity. We don't have enough issuance. The data's not there yet, but it is fairly standard for any market to start off with flat pricing. And then as you get liquidity, you start seeing the differential. And that's exactly what we're seeing in currencies around the world where there is liquidity: EUR, US dollar, Australian dollars, Chilean pesos, and so on. So I think this is what we look forward to. This is, of course, why we need capital markets development, why CM squared is so important, because it's the development of capital markets that will give those, lead to those opportunities for issuers. And remember, folks, this is win-win. The investor gets benefit because they get a more valuable product, a more valuable bond with its capital retention features, and as a result, the issuer gets benefit because they get reduced capital costs going forward. Would it change the universe? Probably not. That's going to come down to energy policy, urban planning, and all of those sort of things. But at least we can interest our governments in the chance of getting private capital through this, and preferential private capital.
Yeah.
Sean, may I just say, oh, sorry, please go ahead.
Carry on, Mushtaq, please carry on.
Oh, thank you. If I may just comment on your comment from again, from a more traditional bond market perspective. What you're saying about liquidity is extremely interesting, and I would say it's a bit counterintuitive from our experience over the last few years in green bonds or in sustainable bonds, where the general thinking is that investors are all buy and hold. Nobody wants to get rid of their green bonds. It's it's a tough market. People don't trade these things; they just sort of stick in portfolios and stay there forever. But I think what you're saying not only is interesting, but it also makes sense in a stressed environment. When people are worried about liquidity, they're worried about liquidity not in a happy market, but in a market that's all shut, where buyers can't. Sorry, where holders of bonds can't find a buyer, right? And I think it actually, when you think about it, sounds fairly logical that. Because there's always pent up extra demand for sustainable instruments, that in a stress situation, these might also perform better from a liquidity point of view. So just a little idea, if CVI or BNP wants to do any research on this, we'd be very interested to see it. It would be very much of interest to our members as well. And also the conventional investors that would still have maybe some doubts and questions about these.
Mm-hmm.
So maybe Shalini will have a talk about that later. I'd like to finish.
Taking notes.
I'd like to do a last round because we're running to the end of time, which is an exciting conversation, which about this issue of boundaries and what do you call a transition and taxonomy. And Zelina, this is a question probably to start off with you. In the transition space, an example. Look, I've been having this argument with Mark Carney, I'm going to say, who's been pushing for 50 Shades of Green. And I've been saying in response, yes, 50 Shades of Green is good, but we need a minimum level. To take an example, if Volkswagen, or Proton for that matter, was going to build a diesel car plant, which would save, say, 10 to 15% in emissions, would that be good? Well, we're saving emissions, right? That'd be good. The problem is, if you look at the Paris Agreement and trajectories of change, the emissions reductions we have to achieve in the transport sector are pretty tough. 15% is not good enough. You need to shift to electric or hydrogen or other forms of zero carbon quickly. And if you build an electric car plant, you're actually stopping that company. You're avoiding it. You're making a decision for lower emissions versus higher emissions reductions. You're blocking an electric car plant. And so in that case, it's counterproductive. Now, thank goodness Volkswagen has chosen electric. But this is the sort of issue about minimum requirements we have to achieve the transition. Not all reductions are good. In that context, the reduction in diesel emissions would not be positive. So I'm going to say to Proton, if anyone on Proton is listening, look at electric and the current owners of Proton. Now, we need to be having that discussion in all our sectors, in water, in waste, as well as in transport, as in energy, which is a discussion Shawni and I have been having, and in other sectors. We need to understand what the minimum requirements are and then look at 50 Shades of Green above that, will be my argument. But of course, we don't have any fixed guidelines. And someone's been asking a question about if you build a green investment and it leads to deforestation, is that seen as bad? In Europe, we've looked at a thing called do no significant harm. We've tried to bring this in. This is European taxonomy or regulation is not in place yet. It's coming into place later this year. But that governing regulation would cover issues like that. You can't build a solar farm in a wetland or an old forest, for example, under the European regulation. But at the moment, we don't have fixed requirements in the ASEAN market or in most markets around the world, actually. So it's a sort of caveat emptor. You propose what you're doing, you get an independent review, and the investor makes a call. Zelina, how much of an issue do you see this in the Malaysian sector? Do you think it would be benefit by having more guidance from regulators in this area? Or do you think, in fact, we haven't seen such a problem and it's a small issue? What's your thoughts on guidance about what is sustainable?
I think we've listened to the noise coming from other regions. I think one of the biggest noise we've heard is too much guidance is not enough. Too strict definitions is not good. But on the other hand, I think to ensure that investors have a sense of comfort, that there should be a level, a foundation, a base case. In my opinion, I think, and this is my personal opinion, and there's been some study undertaken in Malaysia on transition finance. And I think the suggestion has been to go beyond use of proceeds and to also have the issuer disclose their sort of journey in carbon emissions, to disclose their targets for scope 1, scope 2, and scope 3. I think a taxonomy would be relevant because, again, the other discussion is in some spaces, taxonomy is too rigid and there are too many parameters and it's too difficult to navigate. But on the other hand, there are too many definitions. What do I do? I mean, how do I decide? So the best thing to do is if I'm doing RE, then I'm green. But if I'm doing anything else, is it green? Is it not green? And there are too many standards out there. So there is a call for alignment. There is a call for some basic foundation. I think that logically makes sense. Just to set the parameters of what would be appropriate and give room for flexibility within that without clearly defining each level. That's, I think, in my opinion, would help. But I do believe that bond and Sukuk issuances, we should start looking at the owners of issuers to disclose more than just the use of proceeds. In the long run, I think that would be more beneficial.
Interesting point. Jessica, in the UAE, regulators have issued principles for sustainable finance and so on. Where's the discussion on this topic gone so far? Are they referencing other markets or is there a local discussion?
So, I'm very positive about the steps that the UAE and some of the other countries in the region have taken in terms of their green finance, sustainable finance guidance. 2020, the guiding principles were published. And there's very much a collaborative effort across the financial regulatory bodies here, which I think, again, is quite indicative of how we move forward in terms of working together. I think at the moment, there's a lot of leveraging of what's happening in other regions. I mean, I think, and Zelina, you may agree, Mushtaq as well, a lot of us are still looking to the EU because obviously the EU has progressed at quite a lot of pace. And in terms of the taxonomy and other discussions it's sort of a watching brief, but I suspect it's even more than a watching brief, because where the EU ends up is probably where the majority, I think, are going to go. At the moment, the guiding principles that we have in the UAE, they're just voluntary. They're pretty light touch. There's probably some resistance in terms of implementation on the basis that in the GCC, green finance, sustainable finance, ESG frameworks are still sometimes seen as a burden or a cost. So we have our legwork to do in terms of translating this into opportunity, growth, diversification, and so forth. If it was down to me, I'd probably push for more stringent guidelines. And I think Zelina's point about you can never have too much, right? Because right now, perhaps we need more granularity, so that really helps us understand what qualifies, what doesn't, what fits into transition, and so forth. So I think it's a great start, but my overriding sense is there's still a lot more work to do, as well as translating what happens outside and what we need to then do here in the region that's nuanced and specific to the region.
Interesting point. Look, I'm conscious that I've gone slightly over time, so I need to move towards wrapping up. I'm going to ask you all to finish up with a comment about where to next, given the pipeline that we've exposed, which, as Bridget says, is only the beginning of a pipeline, and how do we take this forward on the issues of concern? We know that there are extraordinary opportunities, but how do we actually make these happen at greater volume and greater scale, including that question of volume and aggregation, I guess, Zelina, in the Malaysian market, moving from small sukuk to large sukuk. But perhaps I can start with Mushtaq, Shawnee, Jessica, and Zelina, if that's okay, in that order, just to give us the final comments. But look, feel free to go to town on what the agenda should look like.
Sure. Well, I'll go out on a limb here, and I hope I'm going to speak on a personal basis here. I don't know if this is official, but personally, I think that official sector action is super helpful in ASEAN. And I also think that, as Zelina did mention, the region is much more powerful than any individual country in the international sphere. So while the efforts of Malaysia to lead that are fantastic, I think the more that can be done on an ASEAN level to present the opportunities as a bloc, and to promote ASEAN as an investment destination, and to create kind of say more standard principles that are uniform across the region to reduce any confusion from investors will be extremely valuable. That will also give issuers and the financial industry the impetus and the kind of, the sort of push, I think, to develop their own internal capabilities.
Great point, Mushtaq. Thank you. Shawnee, give us an agenda. Lay down the law.
I think we can go back to your opening remark, right? We face unprecedented, parallel, and connected crisis, COVID-19, lack of social infrastructure or support, climate change and biodiversity, and these are all connected, very closely. So now, as we are in 2021 with the sign of vaccine and recovery, I would really want to encourage, the notion of green recovery towards, transition to a more sustainable model. So that requires, ambition being set, at country level, issuer level, and with great transparency. I also always believe, transparency is the best policy when we do not have clarity, absolute clarity, in defining the specific of transition or green at the moment. But, transparency can address some of the misalignment, and the market can decide, on its own of what can be fitted into specific investment mandates or fund. But certainly it requires all parties to jump in, the sovereign sector or the public official sector to act as a catalyst in terms of issuance. At the same time, in terms of an investor, right? We have seen great support, from the domestic market, particularly the asset owners, and central bank in pushing ESG investing. So we can mobilize more of the capital from the private sector to do so. And the final word is, how do we leverage, the international demand to support Malaysia or ASEAN. And I think that could be something very interesting for us to crack in 2021.
Thank you, Shawni.
Thank you.
Very optimistic. Jessica.
Okay, I'll keep my comments very brief. I mean, actually kind of echoing a bit of Chowny anyway. I mean, obviously we need more sustained support and participation from governments. We need more public and private investment, and we need the big sovereign wealth funds to just step up a lot more. I do think we need a legal and regulatory framework that really permits growth whilst actually keeping these standards in place. And finally, I said I'd get it in. Given that it's International Women's Day, we need more women in leadership positions.
Good on you, Jessica. Zelina, please.
Hi, thank you. I think the way that Malaysia is looking at it, the key areas that we're focusing is on the quality of disclosure. Shawni is absolutely right. The more transparent the issuers are and the quality of disclosures meet the demand, the needs of the investors, then you will see greater traction in this space. The regulators are also looking at things like data, taxonomy, collaborations within the various ministry governments, within the private sector and the public sector. So I think these would be the key drivers to garner greater growth. And I honestly believe that we need to move into sustainable finance and transition finance and widen the scope of kind of projects we're looking at. I'm going to take a personal stand like Mushtaq, and I feel that institutional investors need to look at pricing. And I think one should look beyond responsible investment and possibly start looking at impact investment and look at the impact you're doing and therefore price accordingly. And yeah, I think, and I do believe that there is potential for private markets to take a role in going forward. It's going to go beyond the fixed income and equity market. I think the private markets need to step up as well for us to make the kind of transition we need by 2050.
Fantastic. Thank you, Zelina. Thank you, everyone, for being on this panel today. We have three big opportunities. One, to build back better. We have to recover from this pandemic. We need to revive, regenerate our economies. But we need to look to the future, not to the past. And that does mean some changes, a more resilient, a more sustainable world. This report talks about energy, transport, waste and water, and so on. It's a shopping list for the future. It's a taste, the teaser of what else we can be doing. You've heard today about transitions, about resilience, and other sectors that we also need to explore. The main thing is there's a lot to be done, and we can create jobs and we can create economic recovery through doing this. Two, we do have an existing market. We've done it amazingly well, thanks to people on this panel today and others. We have a 1.1 trillion green, 1.6 trillion if you count the sustainable bonds market and equity markets and sustainable loans. So in China and in other countries, huge sustainable loan markets. We've done well. We haven't done enough. We've just done well. We have a lot more to be done. But lastly, we have some solid foundations. Thanks to the Malaysian Securities Commission. Thanks to Bank Negara's principles of taxonomies. Thanks, of course, to CM Squared, whose job it is to do this. We have a damn good start and chance to make a difference. But it requires all of us, of course, putting together. We need Shawni to do a lot more deals, for example. We need Mushtaq to invigorate his member base to be looking at Malaysia. And we need Jessica to build those bridges between different economies and the reasons. But we need Zelina, of course, to pick up this regulatory agenda and push even harder, as I know she will, because she is, for International Women's Day, one of the great women's leaders of Malaysia. Thank you, Zelina.
Thank you, Sean. Thank you very much.
Thank
everyone.
you.
Thanks, everyone, for joining us today. This session is recorded. You will be able to get it climatebonds.net or on YouTube. Good luck with changing the world.
Thank you, Sean.
Thank you.
everyone.